So recently, OPEC or OPEC plus, we say plus because when we add in Russia, it's the OPEC nations plus Russia, had a production cut. Well over 1 million barrels a day was or is going to be cut or reduced in terms of oil production for the world. And what this did really is cause the price of oil to spike. Oil was sitting somewhere in the $60 to $65 range, WTI pricing. And that caused that announcement of a production cut caused the price of oil to spike. And now oil is actually in the low 80s. So it had a significant impact. And there are many analysts out there that talked about how this may or may not affect things going forward with the slowdown, the economic slowdown right across the globe. Price of oil was feeling the effects and dropping in price. And I think Saudi Arabia, who heads up the OPEC nations, wanted to take a proactive view, wanted to be proactive, so they cut production. The main question, I think, for investors and for Bank of Canada and the Federal Reserve, actually, will this cause inflation to move higher again? I've said this on the show a few times now that I believe a lot of what the Fed has done, the Bank of Canada has done with raising interest rates, didn't have as much of an impact on inflation as lower oil prices. When the price at the pumps is much lower, when the cost of filling up your tank with gas is much lower, when businesses can ship goods to and from their customers at a lower cost because energy or oil is cheaper, when we can travel and buy plane tickets cheaper because the cost of filling up an airplane to be able to travel with oil, gasoline is cheaper. It affects us all. It affects all of our wallets. When oil prices rise, it can act as another tax on businesses and investors. So will this affect the inflation rate? Well, I guess time will tell, but I think it can. And if we do see oil stay or elevate to maybe $90 to $100 a barrel, or even go over $100 a barrel, and if it stays at those price points for a while, for a long period of time, I think you will see inflation gradually move higher again. Will that mean that the Fed and Bank of Canada have to continue to raise interest rates? I guess we'll have to see, because raising interest rates to slow demand will be a very harsh and blunt instrument to fight inflation that is being caused mainly because of higher oil prices. So we'll have to see what the Fed says, what the Bank of Canada says, if oil prices were to continue to move higher and stay higher for a longer period of time. But definitely something that individual investors need to focus on. And before we go on to the next topic, I think we have a chart of oil here that we could show. There it is. You can see how much oil has come down. Oil has moved from the top left to the bottom right, which is a good thing, versus bottom left to the top right. And you can see here in this chart how oil prices have spiked in the last little while. So keep an eye on oil prices, because I think it can and will affect inflation.